Hello and welcome to a brand new episode of Smart Money on CNBC-TV18, and this is the last episode of what has been a fabulous year for the equity markets. The Nifty is up over 20% this year, the mid-cap's up almost 40%, and we've had a smooth run in many stocks. But the big question, the million-dollar question is, what are the stocks to watch in 2022? We have Gurmeet Chadha of Complete Circle Consultants who joins us now to talk about that. Gurmeet, Happy New Year to you and your entire family. Hope you have a great 2022. It's been all about stocks, right? So before I head straight to your list, is it going to be very different in the year to come?
Hi Sonia, and I wish everyone at CNBC and you a very happy new year. I think every year is different. Is what I have. I've been in the market for about 18, 19 years. Never seen two similar years. So I think 2022 while will be very challenging, but we are entering into probably a decade while we are discussing 2022, where we are at the cusp of transformation across energy, across digital transformation. So it's going to be a challenging year, considering the valuations we are in, but I still think we have, it's going to be pretty exciting.
Okay, you've had a great track record in the year gone by in terms of picking stocks, so I'm very excited to know your list this time around, and I'm sure our viewers are as well. Let's start. What's the first stock on your list?
So Sonia, as I said, I'm working on this theme, a broad theme, which is digital compounders, which we have been discussing in our various interactions, and I've broken this theme into subsets. So one subset of this is financialization of savings, and I'll come to others, and I'll begin with that. And here, this has to be a part of your portfolio, because we started the year pre-COVID at 13% IT weightage to Nifty. We are ending it at 18%, and my sense is that technology's weightage to the index, as well as the use of technology by traditional sectors, both are going to catch up. And that's the broad theme which I'm going to break this. So starting with the first one is CDSL. They've crossed 5 crore demat accounts last month. And they are about 5.2 crores, almost 90 plus, 590 plus depository participants, and very good business model. There are three revenue models to make it simple for users. One is your online, the annual issuer charges, right? So every CDSL or NSDL for that matter charges per folio a certain charge, which is very steady. It's like an annuity income. It's a direct function of the number of folios and the BO accounts you add. Second is transaction revenue, which is function of the delivery-based transactions which happen, and we have seen the surge in the capital market participation. Then you have online usage charges of KYC, of e-voting, e-KYC, etc., which CDSL has been pioneered. Right, and then there are corporate actions and IPO. They also charge for credit of securities, crediting demat. So very asset-light model, 70% kind of operating margin, OCF by EBITDA at probably 90%. I know the valuations are stretched, but this is how 2022 will be. But I think this number of demat accounts, which are currently at 8 crore, will eventually head to 15-20 crores over the next 2-3 years. And I think this is one business model which perfectly captures the growing equity cult in the country.
Okay, perfectly captures the growing equity cult in the country. CDSL is the first stock that Gurmeet has. Gurmeet, the next stock is HDFC Life. And, I have a bit of a problem here. I'll tell you why. Of course, great pedigree, great business, good industry. But for some reason, the stock is not performing at all, right? I mean, even in this full year in 2021, while the Nifty is up 20%, HDFC Life is down 4%. You still have high conviction here?
So, Sonia, it's been a tough year, right? Huge COVID claims, rising reinsurance rates, and I think still they have done well. So if you see the VNB margin, that is 27%, which is value to new business, which is the measure of profitability. Their persistency ratios, which is policy crossing 13 months and 5 years, is the best. And insurance works on embedded value, which is basically future profits of your existing business, right? That's insurance is. So better the quality of the business, better the way they are using digital initiatives, including onboarding, including servicing, including claim settlement, makes me very excited. And I think our insurance, life insurance penetration is sub 3%. Even countries like Malaysia is 5%. Singapore is obviously high at 6-7%. Aging population. Also, Sonia, there is this long income products and pension market which is developing. So this is a very balanced product product between savings, ULIP, as well as, this annuity and protection plans. So that makes me very, so I'm actually gung-ho on insurance as a specter, and I picked HDFC Life since she was discussing one of the themes here.
Okay, you have been, positive on insurance, I think, for the last 2 years, right? And some of your stocks have done very well. What next? You like the banking space, but you would stick with some of the safer names like ICICI Bank?
Oh, I think ICICI is bridging the gap. I think it's turning around. So while we have discussed asset quality metrics multiple times with you, I was very impressed with the analyst meet they did a couple of weeks back. Their mobile app has added 4.5 million customers with a 10% cross-sell rate. They have this digital lending platform, which is iLens. I was seeing that only 15% KYCs were done in person. So the way they are transforming this B2C business of lending, I think makes me very, very, gung-ho. They did a credit growth of 19%, Sonia, versus HDFC doing 16%, likes of Kotak doing 14%. Even on B2B, the focus on trade finance, SME, etc., is phenomenal. I think that they're simply turning it around. Look at the investments they have done in the fintechs, over 125 investments. They tie up with Amazon Pay. I think a lot of this will catch up. And if you ask me, I think they're 3-4 years ahead of some of the other banks, and still available, around 2 book value. Healthy correction, more than 15%, in this recent sell-off in the market, makes the valuation also more reasonable.
Oh, absolutely. And I think ICICI Bank is a front runner as far as digital banking is concerned, right? I mean, I was reading a report which said that they are on track to completely transition to a digital bank, and that's big. I mean, especially in an environment like this. The next stock that you've picked out for us is something you've liked for a while, Minda Industries, and it has done fabulously well, Gurmeet. I mean, it's up 200% this year and is a big beneficiary of this rapid electric vehicle adoption. But don't you think it's a bit too late to jump onto this one, or is there more to go? I mean, don't the valuations look stretched already?
Near term, yes, Sonia. So I think the second theme, as I was talking about, is this EV and clean energy theme. And I think Minda captures that. I think the ability of the company to increase the kit value per car. So if you see the vehicle cost, now Minda makes up 10 to 15% of the parts they supply to a vehicle, right? So that's a phenomenal jump. Last quarter, the industry degrew by 4%, the auto ancillary. They grew 30%. So the traditional ones like, the horns, the switches, they have 70% market share, LED lightings, etc. They're doing very well. EV, they are turning it around. It's one of the better plays there. So the power plugs, the DC converter, battery management solutions. They recently did a JV with a company called Freevo, which is into two-wheeler EV space. And great return ratios. So as I said, I think this is one company which has, and more the large clients of Minda, Maruti, Bajaj, etc. do EV-led capex. Better is as I said, the contribution which is going to come from them, and it is still 33,000 crore market cap, Sonia. So I think the industry is going to transform, and you'll have more consolidation here. So I think it has long legs, but yeah, near-term valuation. So staggered buying may be a better option.
Oh, absolutely. No complaints as far as the fundamentals are concerned. I mean, this is one of the best performing and best, companies in the auto ancillary space. It's created a lot of wealth for shareholders. My question was only on the valuation stretch. Let's move on to one more before we take a break, and I'll do a quick recap as well of the stocks in case our viewers missed out on any. But you were talking about this clean energy space, and Praj Industries is one stock that you've picked. Now here again, the complaint is that it's not performing for some reason. Why do you think that is?
So, it had a sharp run up, Sonia, from I think 150 to, that 350, 400 levels. So I would not say it didn't perform. Then it's been consolidating.
Got stuck there.
Yeah, consolidating for a while. So there are three segments here. So clear leader in 1G ethanol, front runner in 2G ethanol. 1G ethanol is where you make from sugarcane. 2G ethanol is what you make from all kind of grains. extremely strong on compressed biogas. I think that could be the next growth lever in my view. You can make, energy molecules from agricultural residue and waste, which so government has launched a scheme of having more than 500 biogas plants with 15 MMT kind of a target. They have this REN gas technology, which is their proprietary technology. Then is this, zero discharge and the renewable chemical space. So it plays the exact, the decarbonization theme as well as reduction of emission theme in my view. So it's like a biotechnology company in a capital goods space. That's how I position it. And I think if things go wrong here, they are probably more, themselves to blame. But the kind of, the proprietary skills they have, the technical prowess they have, I think they are headed bigger. And India has a lot of big plans in this space. And India is going to be a leader as far as I am concerned, especially on ethanol, biogas, and some of these renewable energy space.
Okay, well, those are the first 5 stocks that Gurmeet has for us, the top stocks that perhaps you should look at as we head into 2022. A quick recap: CDSL, HDFC Life, ICICI Bank, Minda Industries and Praj Industries. Those are the first 5 set of stocks. But let's do one thing. Let's take a quick commercial break. Don't go anywhere. When we come back, we're going to talk about more stocks, more sectors, themes that you should look at as we head into the new year. Stay with us. Welcome back. You're still watching Smart Money on CNBC-TV18, where we are discussing all the top stocks that you need to buy in 2022. And we have Gurmeet Chadha of Complete Circle Consultants with us. He gave us a list of 5 stocks before the break. Now we have 5 more to go. Gurmeet, take it away. What's the next stock on your list?
So, continuing with this, green energy, the other company, space I like is Tata Power. Completely transforming, its energy portfolio. So it's actually moving from a commodity player to a energy services solutions player, in my view. So the renewable portfolio will become 60% by FY25. They have a clear roadmap. Currently, it is 30%. The number of customers they're talking about and consumers should go up from 5 million to 20 million. From 12 gigawatt to 25 gigawatts. Their solar EPC segment continues to get a very robust order book. In fact, if you see the solar rooftop coverage from 18 cities, we are almost at 100 cities. This is likely to go up. They are doing, all the necessary tie-ups on the EV charging also. So it completely, this entire energy ecosystem, I think it's one of the most suited place to play that.
All right, so that's on Tata Power. The next stock you've picked up for us is Dixon Technology. This stock had a smooth run, over the past 1 year, 1.5 years, but then it sort of consolidated around these levels. You expect that there are more triggers to take the stock ahead?
Yeah, so the third theme is this PLI-led capacity creation in India, right? Especially more on electronics. Now we have a semiconductor policy in place. So I picked up Dixon. I understand, it's always been a pricey company, volatile stock. So it's both an original equipment manufacturer as well as an original design manufacturer for both domestic and global brands. They are all into now refurbishing, the set-top boxes, LED panels, appliances, mobile phones. What I'm impressed is their capital light manufacturing integrated model, very frugal cost structure, ability to do modular and be flexible. And it caters to the best brands. They're very competitive, 35% top line growth, Sonia, in last 5 years. So I think this is one company which can continue to grow that at that 30-40% pace. And there is this huge opportunity to capture the push towards getting market share with shift of global supply chain. So, but again, pricey and has to be a more long term than immediate or near term gains.
Okay, so look at this with a more long-term perspective because it has run up quite a bit. Fair enough. IEX, similar story there, right? I mean, is this also in this energy theme, the IEX stock? And would you not be concerned despite the kind of run-up that we've seen? Is there more to go?
I would. I think so, because so the fourth theme is this platform plays in India, right? Too many platform plays. So I just picked up IEX. It's both energy and platform. So only 5% power in India is traded on the exchange. I think there is a lot of runway. Government has implemented this market-based economic dispatch. It's going to start, the phase one is going to start from April 2022. So there are a lot of policy changes which are driving the shift in power. It's an energy marketplace where you trade physical electricity, renewables, as well as, the energy certificates. They are growing volume, very, very asset light, high margin business. Then new products which got launched, the volume actually is growing quarter on quarter, like 20%. Recently, we saw the coal shortage, and the lot of generators as well as consumers are willing to pay high prices, on the exchange and buy electricity there. So I think it's a future play on energy becoming actually a commodity which is available on a real time basis, on a marketplace basis, than on the traditional PPA basis.
Okay, got that. We just have a couple of minutes to go, Gurmeet. So you want to squeeze in the last couple of stocks that you like for 2022?
Yeah, so I'll do actually 3-4, and just so that the last one is this food tech. So we have about 15 million people who are ordering online food, have 120 million people who are doing online shopping. I believe this trend is likely to continue. There's a huge scope there. Jubilant FoodWorks, I've been saying, is a food tech company. It's a multi-brand QSR now, getting into more segments. 70% market share in the organized pizza. So there's this unorganized to organized movement which is also likely to happen. Great analytics, great digital infra, the way they transitioned in the COVID period. Other one I like, which is an all-time old favorite, is Tata Consumer. Huge digital initiatives being taken at supply chains levels, etc. And then the last one, Sonia, since we are paucity of time, is the regular IT plays, right? We've discussed Infosys on multiple times. But some of the new ones like the LTTS, the KPIT, which is again mobility-led, I think makes the cut for me. So broadly 5 categories: financial savings, the energy bit, the PLI-led capacity creation, the platforms plays, and this food tech. If I were to sum it up.
Okay, so in that food tech space, I'm sorry, because it's New Year's, I'm sure a lot of people will be ordering from Zomato, Swiggy's of the world. Apart from InfoEdge, what about Zomato? I mean, it hasn't really done that well, but from a long-term standpoint, 3 to 5 years out, you think it could be a great buy?
I have my doubts, Sonia. I'm still that old school management who wants to see a path to profitability. Maybe Zomato would be a very different business 2-3 years from now. And I put Zomato and some of the gaming companies and the direct-to-consumer companies in a basket which I call concept investing, right? Take small stakes and hope something works out there. But the guys who have proved it, proven track record of profitability, scaling up, something like Jubilant FoodWorks, I think the QSR chain makes the cut for me more than the food delivery if I were to differentiate between the two.
All right, Gurmeet, always a pleasure speaking with you. So much to learn from you every time we chat. Thanks a lot for joining us, and have a great 2022. Hope it's full of not just wealth, but a lot of health, which is, I think, the most important thing, right, these days. Thanks so much for being with us.
Absolutely. Thank you. Always a pleasure. Always a pleasure.
Okay, well, with that, it is curtains down on another edition of Smart Money. Thank you so much, viewers, for being with us through the year. Thank you for all your feedback and for watching as well. Keep writing to us. We love hearing from you. And until we meet again, Happy New Year.